Alright guys, so in this video I'm going to be basically explaining to you how I was able to catch this 1:7 trade on Dow Jones or US 30 this week. So before I actually do that, I would like to explain to you, how to make or capitalize on higher time frame movements. So higher time frame movements such as maybe the daily time frame. So when you come to anywhere on the chart, so let me show you this actually practically before I move on. So when we come to BTC, okay, let's just go to BTC. When we come to the 4-hour time frame like this, so this is the 4-hour time frame, or let's just go to the daily time frame. So when we come to the daily time frame, we can see that BTC has made this sort of indication. So this BTC has made this indication right here, and then what you would do is that whenever price make or gives you an indication, normally it is indicating to you the direction in which it wants to move for a certain period of time. So when price usually gives you an indication, you want to expect some sort of correction, and sometimes these corrections can take some time, because when you look at this correction like this represents 4 daily candlesticks, which means that this correction took 4 trading days, which is something that you can actually capitalize on when it comes to trading, by looking at the time frames, or by looking at the lower time frames, or the time frames that come before the higher time frame that you are looking at, if it actually makes sense. So for example, in this case, you are looking at the daily time frame. So daily. So when it comes to the time frames that are lower than the daily time frame that are but are strong, we have the 4-hour time frame, we have the 2-hour time frame, and then we have the 1-hour time frame. So these are time frames that you can trade on that are much lower than the daily time frame, but they will give you really clean trades, and that is what I'm going to show you, basically how to utilize this sort of idea. So when you come to the daily time frame, you can see that price has given an indication, and when price gives an indication, normally you'd expect a correction. So let's look at how we can spot this sort of correction. Before I actually explain to you the trade, I just want to open your eyes when it comes to certain movements in the market. So when it comes to the 1-hour time frame, realize that this is actually a trend. What you see on the daily time frame as simple price action or as candlesticks is actually a trend on the 1-hour time frame. So I need you to pay attention to this because it is very important. So if I take everything outside, so let me just clear everything outside here, so that let me just clear everything here. Let's clear this too. So if I am to mark this step by step, you're going to see that price made this low here. So if price is moving in an uptrend, in a strong uptrend, and it is respecting structure, it is usually a very good opportunity for you. So if price is trending, normally it doesn't break structure. Okay, so you can see the price throughout the whole of last week, price was just moving up, making more support levels, and this is the 1-hour time frame movement. So when price is trending, normally it moves such that it doesn't break the support or resistance levels based on the trend. So if it's an uptrend, you can see that price doesn't break support levels. This is something you're supposed to keep in your mind, and you can see that price breaks resistance levels. So this is a sign of a good trend. So if this is occurring on the 1-hour time frame, you would expect that if price wants to make a correction on the daily, right, then it has to finally do some sort of breaking or break the swing lows that it is respecting. So as you can see, price is actually respecting, or price was respecting the swing lows that it was making here throughout the whole of here. Here price, you can see that price was just an impulsive move, or just one candlestick that burst up. But when we come to multiple candlesticks that price decided to move down here, you can see that it was a bunch of buyers and sellers fighting here. But the main point is that you want to track the swing lows and swing highs that price is making, if it makes sense. So you can see that price is making these swing lows, and it is respecting them. It is respecting most of these swing lows. So you'd expect that if price wants to begin a daily correction, what would that look like on the 1 hour time frame? So if price is moving upward like this, it is respecting its support levels at this point. So you'd expect that price will either fail to break the resistance and then finally break the support. And most of the times when price does this, it just keeps going. It doesn't give a lower high, because normally you already have the lower high here, comparing this lower high to this, this high here. So this is one way that price changes trends, and since the higher time frames are strong, you can actually trust some of these. Not although it doesn't work 100%, but it's going to work most of the times. So this is one way price can change trends. Also, another way price can change trends is basically price will just give you that high. So price will give you the new high, and then it will usually break the support level. So this is something you're supposed to pay attention to, but normally price just fails to break the high. And then this is something I've been seeing a lot, and this is something that happened last week a lot on a lot of pairs. So when we keep marking these support levels, consider there's one here too. If you need help marking your support levels, you can use this tool here called pivot point high low. So if I turn on this pivot point high low, you can see that it has been marking all these swing lows that I just marked here. So you can see this, and here it's marked the week here, as you can see, which is quite similar to where we marked here. So you can see this. So this tool is quite accurate when it is marking its swing lows. So you can check it out. It's called pivot point high low. You can just come to the indicator side and search for pivot point high low. You can just literally search for this and you're going to see it. So if I turn this off right now, you can look at what price is doing here. So you can see that when price is making support levels, it actually breaks resistance levels right from the beginning. This resistance was broken, and then price made a lower high here, but it never broke the support level, and this resistance was eventually broken. This one was also eventually broken. Actually, you might be able to use this as a lower high, and then you can see that there's also price action here where price made this resistance level and then made these mini resistance levels, but price still failed to break the support level here. Price made a support level, break resistance level, made a support level, break resistance level. So when we come to this recent support level, we can see that, so let me do this. When we come to this support level, we can see that this is the resistance level that is to be broken, but price doesn't break this resistance level. So as you can see here, so we can see that the moment price started making these resistance levels that were getting lower and lower, this is like price trying to show you that, okay, maybe price might not keep moving up like it's supposed to, or like it is. So you can see that throughout this whole process, price made a similar pattern here. You can see that price made a similar pattern here, but it never broke the support levels that it had. So you can see here, this is the major support level that price made here, but you can see that price respected the support level right over here, and you can see that that is not the case for here, as price eventually broke the support level here, as you can see. So because we have 1, 2, 3 lower highs before the most recent lower high, or the most recent high here, you can see that when price broke the support level, we could have sold for that daily correction that we're expecting here. the daily correction that you're expecting here. Okay, so this is something that I wanted to show you, so you could sell, and then if you wanted to swing, you just move your stop loss to resistance levels, so that when price is changing trends, it can take you out. So this is basically how the whole trend change can occur. Okay, when we go to US 32, although US 30 doesn't even look that clean on the daily time frame, but it's a little bit similar. So you can see that price is making support levels. When we come to this side, price is making these support levels, making indications, correcting, and then making other indications. And then now price is moving down a lot. So you can see that when price fails to break here, this will be the whole correction for this indication. And then price will just start pushing up and create a whole trend on the 1 hour time frame, which is something you can benefit on. So actually, when you go back to the daily time frame, when you look at where I took the trade from, this looked like price was going to make a whole trend. Price had given an indication, price gave a correction, and by this time this price action was not here. So you had only had this. So I actually thought that price was going to actually continue going up until it made a new high on the daily time frame. But sadly that didn't happen, but that is okay. So you can see that when price was coming down from this point here, it was making resistance levels that it wasn't breaking. So if I shift this a little bit, you can see this. Now the moment price broke this resistance level, okay, this could have been an indication. And why is it that you cannot buy from here? Because when you look at the swing low that caused this indication, it was actually a swing low that caused a previous indication. So what do I mean? I mean that when price was moving in a downtrend here, it was making lower highs and lower lows, lower high, and it made a new low when you compare to this low. Assuming price made a higher low here, and then it came to break this, then you could have taken your chances, and then you could have bought from here, right? But you can see that price made lower highs and lower highs, and then it broke. So when it broke this support level here, that was an indication. Then price came to give you another indication. So this is just an indication. You're supposed to wait for price to correct, which is normally the ICC trading strategy, and then price will give you a continuation. I can see that price went straight ahead to break down, but you can see something interesting happened right here. So when price tried to make the continuation, it failed to do so. You can see that it failed to come below the level that you could have sold from, but rather price came up here and then broke. Now you can see that when price was breaking from here, it's made a higher low. It's made a higher low here. Now because of previous movements from US 30, I just decided to wait for price to move up and then correct here, and then that is what I did, and that is how I took this trade. So you can see that right from here price gave us an indication. Right from here price gave us this indication right here. So what I did was that I moved to the lower time frame. So you can be flexible with the time frame. It could be the 15 minutes or the 5 minutes, whichever looks clean for you, you should use that one. So you can see that the 15 minutes, the 5 minutes got choppy actually at a point right here. Price got choppy. It only started trending right here. This is when I started paying attention, because you can see that price action was choppy here. For example, price made this low, made this higher low, and this is the indication. For those who know the ICC, for those who don't know the ICC, or you don't know what ICC is, I've actually made a whole course on ICC. You can check that out. So we can see that when price made this support level, it broke, right? And this might have been the beginning of the correction, made a lower high. I can see that when price was moving back down, it broke up again. So it wasn't respecting the trend. So you can see that this was quite like a sideways movement. So I ignored price until price came to this point actually. So from the screenshot, you can see that I took the trade right from here, right at around this here. So I started paying attention to price again. You can see that price had given us the indication, and at this point it was correcting, because you can see that price had already broken a swing low from the indication. So you can see that price made this swing low here, and then this swing low here too, and then you broke this swing low. So this was where the correction should have begun, but price was just breaking up and breaking down. It was all messy. So this is an example of what you should avoid when trading the ICC, because the ICC is a market structure based strategy. So if market structure is not working, then the ICC will fail on that pair. So you need to look for something that is trending. Anything that is not trending is not predictable. It is not tradable, right? So you need to look for something that is predictable, very predictable. So you can see that right at this point, price started trending again, started respecting this resistance levels. So this is when you come in. So most of the times when you lose a trade, it might have been because price wasn't trending, or maybe just a week out, which is completely fine. So you can see that price was making lower highs, and then price tried to give us a continuation here. But you can see that normally with the ICC, when price gives us a new high, we wait for a higher low, and then we wait for a continuation. In this case, price didn't give us a higher low here, so we cannot enter directly when price gets here. It gave us an equal low, which means that sellers are still strong if they're able to push price such that price makes an equal low here. So you can see that price made this resistance level again. So you can see that this is where my entry actually was supposed to come from, but at this point you can see that this is the third form of entry when it comes to ICC. If you've not seen the entry types, you can also watch the video I made on entry types. So you can see that price made this higher low here, and then it broke. So you could have tried your chances and then taking a trade from here, but at this point my alert didn't hit. I don't know why my alert didn't pop up on the screen. When I checked, I could see that the alert was spamming, but it wasn't giving me any sound or any vibration for me to know that price had hit. So I actually missed my entry, and then price was just moving up, but I decided to wait and see what will happen. So I waited, and then price just randomly started hitting my alert again. So when I came to check, you can see that price gave this long wick down here, and this is where I took my entry from. So I took another entry from here, and then when I realized that price was actually going to move up, I took another entry. I think from right from here. Yes, when price was going. So I took 2 entries, and then I placed my stop loss right around here, which was very sad. And you can see price took one of my positions out right here before it's actually moved. So this was the trade. So when I go back to the 1 hour time frame, you can see that price actually made another indication here by breaking above this. So I literally perceived this as a new trend that was going to form. So I just held my trade. But coming to the second day, you can realize that something very fishy happened here. So when I came to the charts in the morning, price was just moving up from here. You can see that this is around 8 o'clock a.m. I saw this resistance here. Normally when price is trending, it should break. So if price is in an uptrend, this is how you know whether you should get out of a swing trade or not. And I learned this the hard way, because I actually left the trade, and the trade went back to hit my stop loss, which was very sad. Although I saw the signs, I just thought that maybe price would just make a higher low. I don't know why I rejected the signs. But when I went to the 2 hour time frame, you could see that the 2 hour time frame was actually made a higher low here, right? So I was thinking that okay, price would just make a higher low and then keep going. So when you go back to the 1 hour time frame, you can see this. So when price is trending and you want to swing trade, you want to take a swing trade, normally before price makes a pullback, any sort of pullback, or before price hesitates anywhere, normally if price wants to hesitate during a trend. So let's say price has given you a new high, a higher low. It shouldn't hesitate between the high, the previous high that it made, and the swing low. It shouldn't stop between this, right? So it shouldn't come here, then you can see that buyers and sellers have started fighting. This is usually a sign that price wants to change trends. Like here, you can see that when buyers were pushing this up, some sort of rejection started happening here. Sellers were trying to push price down. Can see that there was blue and white candlesticks, which in my case represent buyers and sellers respectively. So price, when it's trending, let's say you want to swing, okay, this is something very important. Price shouldn't hesitate right in the middle anywhere. Before price decides to hesitate, it has to give you a new high. It has to give you a new high. Then it can hesitate, and then you can know that okay, you can keep your, or you can still leave your trade on. But in this case, you should actually move your stop loss above swing lows. I think that is what I should have done. Should I just move my stop loss here so that when price changes trends, it will not affect me too much. So with this case, you want to actually be moving your stop loss to swing lows, and basically when price makes a higher low, so just in case if price decides to actually change trends from here, right, you the trade can take you out, and then you just restructure your sell for sells below this level. So if price is trending one, it shouldn't hesitate anywhere between the previous resistance level or previous form of sales. Also, price might actually get here and then start reacting, right? So this is where you decide if you want to hold your trade or not, because price is actually, price has all the right to react at this point, because at this point you can see that there are a lot of sellers present on this line, as you can see, because this is where price dropped down from. So it is expected that price has the same reaction at that point. But if price doesn't have that reaction, you can see that then that is an indication of strong buying pressure, right? So you can see that price can make a higher low and then make a new high if it doesn't hesitate. But when price starts hesitating, this might mean that price actually wants to change trends and go to the other side. So this is how I was able to catch this trade, and these are the few lessons that I learned throughout this week.